So yeah, today we're going to be looking at some of these financial aspects of divorce and separation, really with the aim of making what can be a very stressful time more manageable by having that knowledge to know where to start. But before we start the content today, I just want to confirm that this webinar is providing information only, not advice. Really, I'm just trying to give you the knowledge so that you can overcome that barrier of not knowing where to start when it comes to relationship separation and how to sort out those money aspects. It's also really important to note that Better with Money is not connected to any other organisation that I'm mentioning today. We don't receive commission from any company. So as we go through, if I am mentioning companies, websites, it's just because I think they've got some really good services that are really going to help you along this journey. Okay, so let's just start by looking at some stats. So in the last 50 years, 1 in 3 marriages in the UK have ended in divorce, but we're still one of the nations with the lowest divorce rate. There was a World Population Review, and according to that, the Maldives has the highest divorce rate, New Zealand the lowest, and the UK is way down in that second half of all countries, even with 1 in 3. Most divorces happen between the ages of 45 and 49. And a UK couple spends just over £14,500 getting divorced, with legal fees being the biggest part of that cost. And understandably, divorced couples have lower wealth than married couples because generally they've had to split their finances and have to start building them up again. So really the main message I want to take you from this slide is that if you are going through a divorce, you are certainly not alone, and divorce can significantly impact those finances, which is why it's so important to understand how the decisions made during that time can affect you in future. So for the next 20 minutes, I'm going to be covering the financial aspects and that's whether you've started that separation process or you think there's going to be a possibility in future. So we're going to go through the basics of the legal process, where to start on how deciding to split those money and assets, what you should think about regarding property and mortgages. And then we're going to cover that often forgotten asset, which is pensions. And I'm going to be outlining the options you have around those too. Then we'll finish off by looking at child maintenance before finishing on managing money after you divorce as well. And we've got that Q&A. Now, I should point out that I'm not a lawyer. My background is pensions, it's financial education, but I have been through a divorce myself. So some of what I'm going to say will be coming from experience. But if you do have legal questions off the back of this webinar, please do consult a legal professional if you need to. Okay, so let's look at the basics. Now, as I say, I'm not going to go through the legal process of divorce today, but I just thought it'd be really helpful that you had a slide that shows the process you should follow. And as you'd expect, that process differs slightly depending on whether you're in England and Wales or Northern Ireland or Scotland. So what I've done is I've supplied the relevant government websites for each of the countries so that if you want to read up more about the legal process that you go for and that applies to you, you can take a look at that. But really today, we're going to be focusing on that middle circle, so making arrangements for children, money and property. Okay, so let's look at the money matters then that you're going to need to consider during separation and divorce. And I'm going to take each one of these in turn, and we're going to be starting with those money and assets. So as part of the divorce process, there has to be a financial settlement. So this is an agreement between you and your ex as to how to separate those money and assets once the marriage is over. Now, that can be done at any point in the divorce proceedings, but it has to be done before you get your decree absolute, which is that final stage confirming that the divorce is legal. Now, you can agree this financial settlement without any legal support if you want to and if it's amicable. But personally, when I got divorced, although we were relatively amicable, we went to a qualified mediator who really took us through the process to help us to decide how to split those finances in that amicable manner. But you can also use a solicitor as well, but using a solicitor will probably be the most expensive route. But whether you do it yourself, you get a mediator or a solicitor, whichever route you go, getting the financial settlement agreed normally involves each of you completing a comprehensive form that shows all of your savings, investments, your debts, your day-to-day living costs, because only once you've got that for both of you can you really then work out how to split those assets fairly. So how do you begin? So I'm just going to run through the actions on this slide. So first of all, make a list of what you own. versus any debts that you have. So you need to include everything from your home to your savings, any household items like your car. And usually the theory is that whoever owns an item gets to keep it. But of course, your partner could make a claim on any of those things. You will also need to value any property that you own. You'll probably need to get estate agents to do this. And sometimes it's definitely worth getting more than one estate agent so that you can get an average price. You can also look at things like property sites like Zoopla, because it's worth understanding, one, what that property is worth, but also any outstanding mortgage on the property. Because really what you're trying to work out is how much of that house do we own? That's what's known as the equity. You know, how much do you not need to pay back to that mortgage lender? Because it's that equity that's going to go on to the financial settlement. Now, if you've got number 3, if you've got joint accounts, you know, decide, are you going to close those accounts? And if so, how are you going to split that money? Now, normally money in a joint account belongs to both of you equally, unless you decide between yourselves or a court rules otherwise. But if you decide you're going to keep that account open, for example, you want to pay bills for the time being, see if you can agree some parameters, like we're going to have a maximum spend per person. Now, if that's the case, you might want to contact that bank and change the way the account's been set up so that you both have to agree to take the money out. Or, you know, you might want to ask for that account to be frozen for the time being. But if you are going to freeze it, then think, have we got any direct debits coming out of that account? Because they will be stopped as well. So how are you going to pay for those bills in the meantime? If you're not going to use that account from now onwards, you can close it, but you won't be able to do that if it's in overdraft. That will need to be paid off first. But remember, you know, when you're trying to decide what to happen with joint accounts do link you financially to each other. And whilst you've still got that joint account or a joint mortgage, it means that your credit scores are going to impact on each other as well. Similarly, think about joint debt, things like credit cards and loans. How are you going to pay those back? Who's going to pay those back? Now, if you've got a joint loan or an overdraft, you are equally liable. But if it's a credit card, it's the person who is the main card holder that's going to be responsible for the debt, not the person with a named card. Now, if you need to, you should contact your loan provider, explain that situation. And that's particularly important if your breakup isn't amicable. Number 4 is to look at investments as well. Just like savings, investments in your own name, you do have the right to keep unless your partner can prove that they've paid in and have a claim on that. Number 5, think about any joint insurances you have. You know, for example, if you've got joint life assurance, which might pay out a lump sum on the first person's death, that might have been taken out to cover the mortgage or the upkeep of children. And that policy will still be valid after a divorce if you keep it going. Now, you're not legally obligated to inform your insurer of your divorce if you've still got that joint policy. However, it's best to find out what options are available to you, and whether you wish to separate that out for the future. Number 6, also think about bills. You know, for example, if one person decides to move out of the house, who's going to pay those bills? Is the upkeep going to fall to the person that's living there, or are you going to continue to share those costs until a financial settlement is agreed? And if you're parents at time of divorce, you're both expected to pay towards the cost of that child, and we are going to be looking at child maintenance shortly. Now, the last one on the list for money and assets is whether an interim spousal payment is required before that financial settlement is agreed. So this is one partner going to pay the other one some money? Now, the most common reason for claiming that interim maintenance is if one person has got little or no income and their ex-partner has got that income that they could share. And again, if you can't agree on how much interim maintenance should be paid or whether there should actually be any payments at all, you and your ex-partner can get mediation. You can go to a solicitor to reach that agreement. So once you've discussed and agreed the money assets, then you should draw up a consent agreement, and that explains how you've decided to divide everything, and that consent agreement then gets submitted with your divorce papers. Now, if you do want to make a start yourself, one of really useful tools available is Money Helper's Divorce and Money Calculator. That helps you to work out, it's got that kind of asset and debt list that you can fill out, helps you to decide, what have I got, what do we owe, how might we split those assets and finances, and it's also going to give you some details of where you can go for help along the way. So a brilliant tool if you haven't looked at that. The next thing that you'll need to think about is the family home and how you're going to deal with that on divorce. And, that's going to depend on whether you own that home or whether you rent it. So I'm going to take each in turn, starting with if you jointly own that home. So firstly, you might decide, actually, we'll sell the home, both of us will move out, and then you could use the proceeds or the equity from selling that house. You divide that so you can then each buy a home each if you can afford to do it. The other alternative, one person might decide that they're going to buy out the other one. They're going to buy the rest of the property from that person so that they can live in it by themselves. And of course, whether that's possible is going to completely depend on your financial circumstances. Usually, one person will apply for the mortgage in their own name to pay the other person for their share of the house. Now, the advantages of doing that is you do get that clean break. The person is then who doesn't have claim on it is taken off the mortgage, and that means that they should then be able to apply for a mortgage in their own name on their own property, provided they can afford it. Now, if the mortgage lender won't approve the mortgage for you to buy out your partner, and because they don't think it's affordable for you, you might have the option of getting a guarantor mortgage. So this is a mortgage where a close relative or even your ex-partner agrees to guarantee the mortgage payments if you can't make them. So there are options there, and talking to a mortgage broker can be really helpful at this time. The third option, if you own your home, is, both keep the home for now. One partner could continue to live in it, perhaps until the children are 18 or leave school, at which point you say, right, when the kids have grown up and gone, then we'll sell at that point. So the ex-partner keeps that stake or interest in the property and then receives a percentage of its value when it's sold. Number 4, if you own it, is to actually transfer part of the value of the property from one partner to the other as part of that financial settlement and without an exchange of money. So it might be, for example, that you've got a property together, and then there's an agreement that one person takes ownership and the other partner gives up some other assets to kind of balance out the value of that house. Now, if you're going to do any of these things, it's really important to consider the tax consequences of changing any assets or transferring any assets that you make between you. And what's really important is the timings. So, for example, if your financial arrangements can be agreed and concluded within the tax year that you get divorced, then the transfer of assets between spouses in that year will be free from tax. However, if you get divorced in one tax year and then the transfer of assets, so the house is transferred to the ex-partner in the following tax year when you're no longer married, it could be that you then have to pay tax on the increase in value, so the capital gains tax. So again, that's where it's worth getting some tax advice and maybe the solicitor involved as well. Then we get on to renting, and there are a few things to be aware of. So if the tenancy agreement is in your name, you have got the right to remain in that home, but it's also your responsibility to make sure that the rent is paid. Also, interestingly, your partner does have the right to continue to live in the property whilst you're still married, just as if you had joint tenancy. Now, if it is a joint tenancy, you're equally liable for the rent payments, and either of you can give notice to the landlord to end that tenancy within the rules set out in your contract. If one of you wants to continue living there once that tenancy runs out or after the marriage has ended, then you might be able to negotiate that with your landlord, or your ex-partner might also be able to transfer or sign that tenancy over to you. Now, different people have got very different views on property, so it's really going to be a matter of finding the right compromise for you both, whilst making sure that if you do have children, these are prioritised in any agreements if you have them. So, for example, is it really important that they stay at the same school? What would happen if you move? So they're the kind of questions to keep in mind. But as I say, if you need help, if you need some legal support, again, getting mediation or a solicitor could help you. Now we come on to pensions, and these are often the asset that get forgotten, but is normally the second biggest asset that we have after the family home. Now, I was looking at an article by the consumer magazine IMechE, and that says that 58% of divorcing couples said that pensions weren't even discussed during the divorce proceedings, and only 15% of divorcing couples include pensions in their financial settlement. And it can be particularly important to consider pensions, particularly in situations where maybe one partner stayed at home, looked after the children and the home, while the other partner has worked to support the family financially. Because in that situation, it will be the working partner that's got the higher pension savings, and the partner who hasn't worked or maybe worked reduced hours is going to have gaps in employment and therefore lower pension savings. So what are the options that you have when you come to pensions? Well, there are three main ones. The first one is known as offsetting. So this is where one person will receive a different asset in the financial settlement instead of the pension savings. So I'll give you an example. One person's got pension savings of £50,000, the other person has nothing. And the other person will then receive a different asset or money equivalent to those pension savings to make it fair. Now, offsetting is usually the most simple and cost-effective way of considering pensions because you get that clean break. And it can be particularly useful if pension savings are small and it would be too time-consuming or expensive to split that actual pension pot legally, or if there's overseas pensions as well, which can't be shared through a UK court order. But there can be some drawbacks to the offsetting. For example, you're going to have one partner that's still left with no provision for retirement. And it can be really difficult to compare pensions held by both partners because there are very different pensions and rules out there. And if one's getting cash or property instead of pension, is that fair? Because actually cash is far more flexible, whereas pensions have got rules and you can't access them until you're 55, and that age is going up to 57 in 2028. So offsetting can be simple, but there are some things to get your head around. The second option is pension sharing. So this is where the court will issue a pension sharing order that states how much of that person's pension the ex-spouse is entitled to receive. So let's say the value of the pension was 100,000, there's a 50% sharing order. That means the other person has to get £50,000 of those pension assets. And that 50% has to be transferred into a pension of the non-member, and the pension provider's got 4 months in which to do that transfer after the divorce. Now, the advantages of sharing: it can be a clean break. It can ensure that both people have pensions for the future. And after any remarriage or any changes in situation, they both still have 50% of that pension. But the disadvantages, of course, is the person that had all the pension at first, their pension is going to be reduced. And often there are some fees along the way to do that sharing order and to make it happen. The third one here, the last option, is the pension attachment or earmarking order. Now, this is where the court will say that some or all of the pension benefits have to be paid to the ex-partner when that pension comes into payment, and that can include any tax-free cash sum as well. And any income received by the non-member is going to be taxed just as if it was earned income. Now, the downside to this earmarking order is that it doesn't provide that clean break. There still has to be some communication and link with your ex-spouse. Also, if the partner with the pension savings dies before retiring, or you as the ex-partner remarries, that earmarking order can normally fall away and nothing comes into payment. The other thing is that payments stop on the member's death. So again, that could leave you as the ex-partner without any income for the last years of your life. So the options I've been through, are relevant for personal pensions. They're also relevant for workplace pensions only. These do not apply to the state pension. Now, nowadays, we all earn the right to our own state pension, either by working or paying national insurance or claiming benefits, things like child benefit or job seekers allowance. And anybody who gets to state pension age after April 2016, which I think will be most of us on this webinar, we will receive the new state pension. And this is only based on your own national insurance record. State pensions nowadays cannot be split or divided as part of a divorce or otherwise. Okay, so we've now briefly looked at money and assets. We've talked about property. We've talked about pensions. The last thing I want to talk about is child maintenance. So when you divorce, you can choose again how to make arrangements for looking after your children and the finances around that between yourselves. And you can normally avoid going to court as long as you can agree where the children are going to live, how much time they're going to spend with each parent, and how you're going to financially support those children. Now, if you can't agree on everything between you, this again is where you either might want to get a mediator involved, and mediators are normally at solicitors' practices anyway, but they tend to work with you both. Or in extreme cases, if you really can't decide, if it does get acrimonious, then you can have solicitors each. You can even attend court, but the court is going to want to know that you've been through all of those other processes and mediation before they get involved. But however you do it, once the living arrangements have been agreed for the children, this is going to dictate whether child maintenance should be paid. And child maintenance covers how the child's living costs will be paid if one parent doesn't live with that child, or one child spends more time with one parent other than the other. Now, it's really important to note that you have to have child maintenance agreement in place if your child is under 16 or under 20 if they're in full-time education. So let's just run through the options here for child maintenance. The first option is family-based agreement. You agree between you, and that is definitely the easiest and quickest route if you can do that. My tip here, though, is that if you do receive child maintenance from your ex, please make sure that on the bank transfer it explicitly says it's child maintenance, because then the person receiving it might be able to use that income when they're going to get a mortgage agreed, as long as that's going to be continuing for a number of years. If you and your partner can't agree on child maintenance, the next option here is to ask the child maintenance service to help you to calculate how much should be paid. And then you've got two options. You can either go down the direct payment arrangement where you and your ex-partner arrange that payment between you, or you can choose collect and pay, where the child maintenance service actually collects the money from one parent and pays it to the other. And that situation is normally appropriate if there's been any form of domestic coercion or abuse, for example. If you do want to make the child maintenance legally binding, you can include that in that financial settlement, and that has the benefit that it's enforceable by law. The downside is that if you then want to vary that in future, you may need to go back to court to get that order changed. You also can't apply to the child maintenance service within 1 year to have that changed. Now, if you or your ex-partner's income or wealth changes substantially, you might want to adjust that level of child maintenance between you. Same rules apply. If it's family-based arrangements, you can just agree that. If it's court-ordered, you will not need to go back to court. If you feel like you need some more information on this, you can approach Citizens Advice, Advice Now, or the Children and Family Court Advisory and Support Service, that's CAFCAS. And I'm going to be putting their details up on the help and support slide at the end. But just before we finish today, you might get through all of these financial arrangements, the divorce gets finalised, you breathe that huge sigh of relief, but there are a few things still to think about from a finance perspective. So I'm just going to run through the last bits now. The first one is that if your income is now reduced because you're single, it might be worth checking if there are any state benefits or grants that you're entitled to. The easiest and quickest way to do that is to go onto the Turn to Us website. It's got a state benefit and grant checker. Both of them take about 10 minutes to complete. You fill out your circumstances and it will let you know if there's any state benefits that you're eligible to apply for. Secondly, if you are now the only adult in the house, you might qualify for a single person's discount on your council tax, or rates if you're in Northern Ireland. So check the government website for your country for details. If you have children and you're receiving child benefit, make sure you let the Child Benefit Office know about your change in circumstances. For example, if you haven't actually claimed child benefit for a while because somebody in your household was earning above that 60,000 and it was all being taxed, if the family income is now lower, you might be able to receive it again. And that's £24 a week for your first child, £15.90 for the second. Now, child benefit can only be paid to one person, and it should be paid to the main carer, which is normally the parent that the child is with most of the time. If your ex-partner is receiving the child benefit payment, you might not be able to get your hands on that money unless they pass it on voluntarily. But you can phone the Child Benefit Office and see whether you can change your circumstances and get that moved over. Number 4 on the list, absolutely make sure you do your rebudget when you separate, working out what money you've got coming in compared with the bills that you've got going out. We do have budget planners on the Better With Money website. Also look at your bank account. They often have some really good tools. And as well as looking at how you might be able to reduce costs, making the money out of money savings, you will also need to update your insurers. For example, if you've still got your ex named on your car insurance, your house insurance, get that changed. And it's particularly important if you've got things like death in service through work, make sure that you're updating the beneficiary forms. You might not want that money to go to your ex-husband or your ex-wife, so do check that out. And lastly, just make sure that your will is up to date. If you've made a will when you're married and you get divorced, it still remains valid after divorce. However, your ex-spouse will no longer be able to benefit from it. They're treated from a legal perspective as if they've died, unless you've expressly stated otherwise. So just take a look at those. Right, and before I go to questions, just some signposting on here: Money Helper, Mind, Gov.uk, Citizens Advice, and Cavcas as well. And it might be helpful. I've put on the right-hand side the details of Citizens Advice, particularly if you're dealing with an aggressive or an abusive partner. All I can say from my own personal experience is that time does heal and things do get easier. I'm now 17 years on from the pain of going through divorce and all that financial assessment, and luckily it is a distant memory. But getting finances right as part of this is absolutely key, so that you don't have to keep revisiting them, having that communication with your ex. So really think about the finances, get that right at outset, and it will make the future a lot easier. Okay, Fiona, that's all I had to say. Just on to any questions that have come in.
Brilliant. Thank you very much, Sarah. Yeah, we've got a couple of questions. One of the questions was, what options do I have for paying solicitors' fees?
Yeah, really good question. Now, if you are in Northern Ireland or Scotland, you can still get legal aid if your circumstances dictate, if you don't have a lot of funds. But if you're in England or Wales, legal aid is no longer available unless there has been some domestic abuse. And that does include financial abuse as well, where one person has been controlled over money. But if you do apply for legal aid, you can use that to pay for mediation, but it is means tested. So for most people, you are going to have to find a way of it, particularly if you're going to use mediation or solicitors, you're going to have to find a way to pay for that. Now, sometimes solicitors will let clients pay their legal fees from the settlement at the end, so you don't need to have to pay anything until you get that money from your ex-partner. So do ask your legal firm about that. The next option, which might not spring to mind, is actually funding from your ex. You know, if your ex is driving this divorce through and they want it to happen, if you can't afford that divorce, you can say to them, well, I'm happy to do this, but actually I need you to pay any fees. So, and that does happen more than you think. If neither of those are an option, then it is really, if you haven't got the money, it will be about borrowing money from friends and family. It could be borrowing money on low interest loans or even 0% credit cards. If you're having to resort to that, please do make sure you're using eligibility checkers to make sure you're going to be approved for those credit cards or loans before you apply. Because if you don't and you get turned down, that could affect your credit score. But also think about things like credit unions. They often have loans at lower interest rates than some of the banks and building societies. And also, you know, if you belong to memberships like IC Benevolent Fund, Support Network, are there any grants that might help you there? There are specific loans that help with divorce. They're known as litigation loans, but very few firms offer those. But if they do, they pay money directly to your solicitor and then you draw down on those funds and then you only have to pay back what is actually used. So a few options there. Do take a look, but I mean, the simple option is normally that you do have to pay for yourself.